Hello again, investing putts with you. It's a great day for making YouTube videos. I live near Denver, Colorado in the USA, and we have a ridiculous snowstorm today. Um, about a foot and a half or 50 centimeters of snow on the ground, and it's still coming down and blowing pretty badly. So anyway, the channel's up to six subscribers, so I'm not quite talking to myself anymore. I'm really happy to have you and really happy to have your comments. So thank you in advance for those comments. I'm planning to do a weekly update of my performance trading. I think it's important to be honest with others and most importantly honest with myself as to whether I'm optimally deploying my capital. I'm not doing this to sell a trading system or to get rich on YouTube. I'm doing this to make money in my personal account. So I'm currently trading the wheel on 10 stocks. Got American Airlines, Gold Miners ETF, Intel, Occidental Petroleum, Schlumberger, Silver ETF, Walgreens, Wells Fargo, and US Steel. I'm about half invested in commodities and industrials, the other half in blue chip value stocks across multiple sectors. Interestingly, I'm only long SLV right now. I'm selling cash secured puts on everything else. Soon enough, this hot market's going to reverse and I will get assigned some of these shares. So I should probably be long on roughly half these positions. Here's a relative price chart of the 10 stocks that I'm trading over the last 2 months. All the stocks are normalized to 1 on January 8th, 2021. So Oxy and American Airlines are up about 50% each, which is incredible. Most of the others are up 10 to 20%. Silver's flat, and gold is down about 10%. The dotted lines are the S&P ETF, which is SPY. My portfolio is in black dotted, and the average of these 10 stocks is in the blue dotted. So here I've removed the individual stocks, leaving behind SPY and magenta, my portfolio in black, and the average of the 10 stocks in gray. So first, I'm very pleased to be beating the SPY, so that's kind of an obvious benchmark. If you can't even beat the largest passive ETF in the world, then you probably shouldn't be trading that strategy. I mean, maybe you shouldn't be trading at all. I'm also pleased that the volatility of my portfolio is lower than the SPY or lower than the average of these 10 stocks. So that's good too. I think you can view the wheel as a hedged long position. So we've obviously given up some upside during a boom time relative to the gray curve, but let's see how we can do when these stocks inevitably come back down to earth. Of the 10 stocks that I'm trading, the only 2 that I've held for the full 2 months have been SLV and GDX. Here's my trading history on SLV. The blue curve is the share price, the red curve is my cost basis, which falls as I continue to sell options against SLV. The orange dots are the strikes of my cash secured puts. So when the share price dips below the strike, I'm assigned the shares unless I roll the put. And then I switch to selling covered calls, which are the green dots. So over 2 months, the share price has been up and down, but is up about 3.4% in total. Whereas I've gotten about 8% return on my wheel trading, which is fantastic. I think this bodes well for the wheel strategy on stocks that are trading sideways, which is typically how they are. Here's the performance of GDX. GDX is one of the few stocks that's been down over the last 2 months, though it's staging a comeback over the recent week or 2. My cash secured put was assigned early, so I sold 5 weekly covered calls. The covered calls were just assigned, so I'll be returning to selling puts. I'm going to hold on to GDX because I'm bullish on GDX going forward. I hold it and silver as a hedge against currency debasement. So since I started trading GDX, the shares are down 2%, but I'm still up 2%, 2.7% on my trading. So I'll come up with some new ideas on videos. Maybe I'll make something during the week, but otherwise, maybe see you at the end of next week with another update. Look forward to your comments. Thanks for tuning in.